Hello and welcome to another update on the TLT iShares 20 Plus Year Treasury Bond ETF. We're taking a look at the chart from an Elliott Wave point of view, and it still seems like the market can't really decide. I'm just gonna switch to the daily chart here. It can't really decide. We've been now grinding above this previous swing low from 2023 for quite a long time, and the market doesn't really want to form that further downside, that one more low highlighted here in an extension of this wave A in the white scenario. I've still marked it with a question mark, but it is quite likely. It's just that none of these movements to the downside really have been impulsive, recently. Not from the 2024 September 2024 high. So they've all been, in my interpretation, corrective, especially this move down is considered a three-wave move down, And so if we are really going down in the white scenario in this fifth wave, it should be an ending diagonal, this fifth wave. And if it's an ending diagonal pattern, then it's not high confidence. So and now we see a bounce. So the question is, can the TLT follow the yellow scenario higher? To be honest, maybe we'll change it to orange. I think it's easier to see. So that's the main question. Can it continue to grind higher? Potentially get a 5-wave move up. And I'm going to share with you the relevant parameters for that as we're heading, closer to new trading week. In this move to the downside that we're tracking here, we can track 1, 2. And again, this would have to be an AB. This can't really be another 1-2 setup because of the 3-wave move down. So I treat this at best as a diagonal, but even if it was an impulse down, this would be a resistance area that shouldn't be broken. Hold on, just need to shift what we've got down here to the right. This time has moved on. But the resistance area is between $89.82 and $92.93. This would be the nearest resistance area to watch. Normally, the 78.6 retracement is already important, $91.75. Any break above already normally shifts probabilities towards the move up. I'm adding the 88.7 retracement here at $92.93 because we might be dealing with a B wave, and B waves are sometimes a bit more aggressive. Bottom line is, I really need for a long trade setup from an Elliott Wave point of view or a typical 1-2 setup, a high probability scenario that we're going higher, I need 5 waves up. I don't think we've had really clear 5 waves in any of these movements to the upside recently. Maybe here, but it wasn't very clear. And so the market could try it again now. But with only 3 waves up so far, probabilities are fairly balanced because we have 3 waves down and 3 waves up. But we have a break above our first signal line here at at $90 basically, or $89, So that's an indication that the bulls are trying. The bulls are trying, but the orange scenario shows you what we would need to see from a bullish point of view. I need to see all these 5 waves filled in. Wave 1, wave 2, wave 3, wave 4, wave 5. That would give me 5 waves up in wave 1. Then from there, we can add support for wave 2, and that could then be a setup and a jump off point, this support area, which I can't define yet, but it would be for a wave 2 then, an important zone. From there, then we can watch for higher in a third wave, and the market could grind higher like that. So this is what we would track in the orange scenario going forward. Important to note that to keep this orange scenario alive, the price should really now hold above the wave 2 low, which formed here at $84.20. I'm adding here this red line as an invalidation point. But really, and I go to the 4-hour chart now, in the very short term, the price should hold above the B wave of the third wave. Hold on. Shows the wrong tool there. The reason is normally in in this move to the upside, I mean, this can't be an impulse either, okay? It's probably a diagonal pattern. Even though, gotta say, it could be an impulse that's developing here. But this move up initially looks more like 3 waves. So please note we're here already on a very small time frame. But really, in any diagonal, the price shouldn't break below the B wave low of the third wave. Here we talk about $85.25. So this here could be wave C of 3 then. Then we get a wave 4 and a wave 5 to complete this 5-wave sequence. That would be ideal. Breaking above 91.75 and 92.93 would be the next objectives for the bulls, while holding above this red line. Now, standard Fibonacci support for any wave 4 pullback in a diagonal is normally between the 61.8 retracement and the 38.2 retracement, so we might test that. I'm going to add the 23.6 Fib level as well to watch. So $89 basically to $86.55 as standard Fib support, and then we could get one more high from there. And if we get these 5 waves, then we can add support for wave 2. For now, this is basically range-bound movement. Market hasn't made a decision yet. This move up is somewhat promising, but honestly, it's only 3 waves, so it could easily be a B wave. The way, or what we need to distinguish them, is this wave 4 pullback to see if we can hold a higher low. That could be coming up in the next couple of weeks. So I'll keep you updated about that. Hope you liked the update. Thanks so much. Bye-bye.